Good morning to all. This is Dr. M. John Bosco, Assistant Professor, Department of Commerce, St.Joseph College of Arts and Science, Autonomous Cuddalore. Now we are going to see Indian money market and money market institutions, then money market instruments. Throughout the India level, there are some fixed systems should be follow the money market, especially from organized sector up to unorganized sectors. First of all, the whole India under the supervisions and control of all the money market institutions and headed by RBI. The RBI only control over all the financial and bankers, other money related institutions and instruments. So they can take some necessary steps regarding money market. Second, in the money market involved by commercialized banks like SBI, Canara Bank, IB, including private and public, foreign and exchange banks. All the commercialized banks also acted as a money market institutions. Third one, cooperative banks. You know very well the cooperative banks. There are three categories: state level, district level, primary credit society. State level, each and every state level they separately running for the purpose of the whole state development. District cooperative bank headed by each and every district, and they controlled the concerned district level cooperative banks and fulfill their needs of the account holders. Third type, primary credit societies. It is each and every taluk level. Especially they focus with the development purpose, land development or other development purpose. Then commercial banks divided into two types: scheduled, non-scheduled. Under scheduled, foreign banks, Indian banks, public, private. Foreign banks, any foreign countries can able to open a branch in India, but they are under the control of and the supervision of the RBI only. They are running their business. Likewise, Indian banks whenever want to start their branch in foreign country, the same rule will be applicable. The central bank of the concerned countries only to authorize and approve their banking business. They only supervise each and everything like deposits or issue of loans or fixed rate of interest, whatever it is. It is changed or fixed or modified or supervised only by concerned countries central bank to take all the necessary steps. Then public sector banks, you know very well about what is the public. The public sectors means all the business transactions, recruitments, managements, each and everything by the government, that is central or state. Sometimes the bank maintained by the central government, some of the banks maintained and controlled by state government. Especially the RRBs only maintained and controlled both central and state, because the sponsorship, the capital ratios, 50% from the central government, 35% from the concerned sponsors bank, 15% from the concerned state. So that RRB is only maintained by both central and state. Private sectors bank, you know very well about throughout the India level there are more number of private sectors banks opened and running their business very effectively and successfully. Unorganized sectors, available indigenous bankers. Before Banking Regulations Act 1949, there are some banks started in India and running their business at the minimum level, like PNB, bunch of national banks and Nidhis Limited and etc. Money lenders, their main purpose of the money lender, they give money, minimum amount to the needy person who want the money. They should pay a minimum rate of interest for the fixed period, that is 6 months or 1 year, whatever it is. So the money lender lending money, at the same time they collect minimum rate of interest from the receivers. Non-banking financial institutions, these institutions also, these companies also running in India, it is also one of the money market institutions because they provide lots of loan facilities to the poorest people, like chit funds, Nidhis Limited, benefit societies, and factoring services, leasing, hire purchase system, and any other financial companies are under non-banking financial institutions. Next, move to money market instruments. The first instrument is treasury bills. What is the treasury bills? The treasury bills is also main and the basic short-term money market instruments. The period is minimum 3 months, maximum 1 year. Up to 3 months fixed by the rate of interest as on 7th November 2024. Today 4.43%. More than 3 months, the government fixed by the central government of India fixed by 4.20%. So it is short-term financial needs fulfilled by the governments. The second one, bankers acceptance. It is issued by all the banks. Likewise, the period minimum 1 month up to 180 days, maximum 6 months only. It is also one of the money market instruments. The purpose, export and import. Involved parties, sometime 3 parties, sometime 4 parties. Likewise, importer, exporter, or import bank or export banks. Third one is repurchase agreements. Whenever a party want to sell their asset to another parties, they should exchange for the cash only with proper agreement, then only to buy back for the asset as a later date, whatever it is after 6 months or 1 year or 2 years, the time period mentioned in the agreement only. So the parties at the time of agreement, they should mention the amount, rate of interest and period also. Especially it is issued by all the commercialized banks, insurance companies. Nowadays the insurance companies also involved in the repurchase agreement system, then pension fund schemes and etc. The period of repurchase agreement is minimum 3 months, maximum 2 years only. Fourth type of money market instruments is commercial paper. It is also short-term instruments. The time period is 15 days, minimum 15 days, maximum up to 1 year. It is issued by all the stable financial institutions and bankers, but each and every institutions and bank only issue through whatever the directions issued by the RBI, they only maintained and issue and collect it. Otherwise, they cannot able to issue this type of commercial papers. The RBI only direct each and everything. Fifth one, municipal notes. Each and every the local government bodies, whenever they want money, whenever they raise their capital, they fulfill their financial needs, that time they able to issue this type of municipal notes. The time period minimum 3 months, maximum 1 year only. Each and every money market instruments maximum period 1 year, apart from the repurchase agreement only, that is minimum 3 months, maximum 2 years. All other instruments issued maximum 1 year only. The rate of interest minimum 7.59, maximum 9.38 for the municipal notes. It is interest paid by the concerned local municipal authorities, the bodies, local government bodies. Last one, certificate of deposits. It is the type of savings bank account. It is also issued by each and every bankers, like recurring or fixed. They fix some rate of interest. Whenever the customers want to close their account, they returned the principal's amount. At the same time, the minimum rate of interest, whatever it is fixed by RBI, they should pay, including rate of interest also. So these are all the financial instruments, especially money market. Thank you. We will see in the next class. Thank you.